One of the big repercussions of this entire war is that global oil prices have spiked massively. In fact, in the latest development, Russia has warned that global oil prices may scale a level of $300 a barrel. This comes as West signaled that it is mulling an oil import ban from Russia, which in turn has pumped up fears of a supply-demand imbalance, which is already seen hitting the oil prices. Even world's leading oil-producing organization, OPEC, has highlighted its helplessness in the situation and said it has no control over the events that have led to the run-up in the global oil prices and that there is not enough capacity worldwide to compensate for the loss of Russian supply. In fact, global oil prices rose to a near 14-year high yesterday at around $140 a barrel. This is the highest since 2008. But let me now, all right, let's first listen in.
No decision has been made at this point by the president about a ban on importing oil from Russia, and those discussions are ongoing internally and also with our counterparts and partners in Europe and around the world. I would note that what the president is most focused on is ensuring we are continuing to take steps to deliver punishing economic consequences on Putin, while taking all action necessary to limit the impact to prices at the gas pump. And as you noted, yes, it is true that there has obviously been an impact of the invasion on the level of import to the United States and to other parts of the world.
Let me, in fact, bring in Madan Sabnavis, who's joining us here on the broadcast. Thank you very much, Mr. Sabnavis, for speaking to us here on Mirror Now. My first question to you is with regard to this warning by Russia. How likely is it? And secondly, what is the worst case scenario that you would pencil in at this point in time, given what we know right now?
No, I think it is very much unlikely that Russia will be totally kept out of this entire oil supply, because we should remember that Russia is the third largest producer of crude oil. And in case there is a blockade in terms of exports from Russia, it will have very serious repercussions, not just on India, but I think on all countries. And the global growth process, which seemed to be reviving in 2021 and was expected to accelerate in 2022, will probably will come to a halt. So, in my opinion, I think there will not be any kind of a deliberate ban on oil from Russia. And to that extent, I think this will be quite beneficial in the sense that we will not be having that worst case scenario to conjecture. But if you're really talking of a situation of $300 per barrel, I think it will be very, very disastrous for the world economy.
Yes, absolutely. But Mr. Sabnavis, you know, the other factor here with regard specifically to India and the immediate impact now that elections are over, everybody is expecting a fuel price hike anytime now. How much do you think that is likely to be? Will the entire burden be passed on, or will there be some sort of a holdback in terms of how much is passed on in prices of petrol and diesel?
You know, actually, there are four parts to it. I think there are four people who come into the picture. One is, of course, the customer. And I think what has happened in the past is that there has been a full pass-through of higher crude oil prices to the customer. But today, I think it may not be very much feasible because it's going to be extremely inflationary, given the secondary and tertiary impacts which come through the higher freight rates and the higher commodity prices, because almost all commodities use road transport for being fed. The second component is, of course, the central government. I think most of the focus is on the excise duty, which is imposed by the central government. And last year, we saw that they had reduced the excise duty by 10 rupees per litre for petrol and 5 for diesel. Maybe some action has to be taken by the central government, but it cannot be to the same extent, because it will definitely upset the overall fiscal arithmetic. The third is the state governments. The state governments, of course, have the discretion because they have a value-added tax. That's an ad valorem tax, which is levied as a percentage of the overall price. And I think that's where there could be differentiation across different states, depending upon how good their fiscal balances are. And the fourth is the oil marketing companies. So in the current situation, between November and today, we can say that while the price of crude has gone up, we haven't really changed the retail prices. Center hasn't cut the excise duties. States haven't reduced their duties, which means that the OMCs have been bearing this particular burden. To my mind, it will be a kind of a shared burden between all the four entities, more likely to be the OMCs, state governments, and probably the consumer to a very large extent.
All right, Ms. Sabnavis, thank you so much for your perspective and take on this important issue.